G'day everyone, welcome back to Pizza Investing. Today is April 7, 2023. This is the natural gas price update. We've got the daily, the 4-hourly and the hourly. And if you notice on our key indicator here, the CCI 1500 with a moving average 400, we're still in a pretty strong downtrend on the moving average. On the hourly, that's also broken further to the downside with the moving average still in decline. But just notice on the 4-hourly, that's causing a bit of a divergence, and that's in a bullish momentum. So we'll talk about that in more detail on each chart. So looking at the daily first, we've got these this resistance line, this hard red line, and also this support line drawn down here at 27.35 and at 20.64. We've also got this descending diagonal trend line, which is a key, and also this ascending diagonal trend line. So basically, it's a bit hard to see there, but I'll drill down on the 4-hour and the hourly in a minute. But you can see there we had a fairly major bearish candle overnight, and it's come and rested on that key support area. So what that looks like on the 4-hourly, you can see there more clearly. There is this support, this key horizontal support, which it's bounced off twice now, but it's also broken through this. This secondary support line here is a diagonal ascending line, but it's bounced off this bottom support line. But notice there's a divergence here. There's a price divergence to the bearish divergence, and there's a CCI indicator is a bullish divergence. So that's causing a bit of confusion potentially, because these divergences usually play out, but sometimes they fail. So I wouldn't be putting the house on it, but at the moment it's showing a bullish divergence, which means it may bounce from there to the upside. Doesn't mean it's going to be a complete reversal and to higher levels, but it could be just a small retracement back to this resistance area possibly. Also drawn is this Elliott wave count. It's at 1, 2, a long 3 count, and then a very shallow 4th wave potentially. And that 5th wave is potentially possibly finished, but possibly still going on. Now, if this breaks below this support line here, it's going to be fairly dramatic in terms of where it may stop. So I'll just drill out a bit, and you can see there's a Fibonacci extension I've drawn here. Let me just draw back down to there. You can see the Fibonacci extension. Hang on, let me just do this properly. Fibonacci extension in that 3rd wave. So the 3rd wave down, the 4th wave up. That's the Fibonacci extension I've drawn. And you can see there, if this 5th wave goes much lower, the first level of key level of support below this other level we've drawn here will be at the 23%, and that's at 1894. And if it falls below that, we may see it go much lower to about 1183, which is at the 38% extension. But notice also, and I'll go to the hour chart in a second, but notice also this diagonal trend line. That's also another support area we've got to respect as well. But again, this bearish price divergence and this bullish divergence on the CCI is causing a bit of, not concern, but confusion potentially in terms of where we're heading. On the hourly chart, you can see more clearly it's respecting both this horizontal support area, but also this descending trend line that was drawn from those high levels. So at the moment, you can see there in the last couple of hours, it's bounced off that and it's heading upward very slightly. So at the moment, I would be going predominantly short, but you must respect these support areas. If it breaks below this next level here, then as I said, it's going to be going a lot lower according to the Fibonacci extension on the 4-hour chart we drew. So again, if it wasn't for that bullish divergence on the 4-hour chart, I'd say pretty confidently all short positions only. But again, we must respect these support lines and also this divergence that's being forming. But overall, it's a pretty strong downtrend at the moment, and there's a couple of minor signs of reversal, but nothing major at the moment until we see higher prices breaking above. The other thing I've got to mention as well is this secondary, the key resistance area up here was drawn. I'm going to keep that there for the time being. But there's also this secondary level of resistance forming. It needs to break above that initially, which is at the 23% retracement from that high to that low. We need to see it break much higher than the 61% initially in that range, but then also much higher than this resistance level. But ultimately a break above this recent high back in March to be more confident about going a bullish. And that by that stage we'll see a bullish movement in the hourly chart as well. At the moment, avoid going long unless you're really risky in your trades, but I would avoid going long and see how we go in the coming hours. Now obviously it's a long weekend coming up, so we may not see much action coming in the next few days, but obviously anything happens in the following days, I'll give you an update. To subscribe and like the channel, support us more on Patreon, and we'll see you in a future video. Thanks for watching.